Be Wealthy and Smart, episode 1045.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I can't even fully express what you're going to hear today. This is a very important interview for the XRP community. This is something that is a document, it's a record, it's education and knowledge. It's something that we need to put on our library shelf for reference. It's something that is going to be enlightening because what you're going to hear is an insightful conversation about XRP and Ripple by two financial professionals, myself and Jimmy Vallee of Valhalla Capital. We're looking at the economy, at governments, investments, and possibilities through our lens of investment experience. Now, Jimmy, being an attorney, a mergers and acquisition expert, and a securities lawyer, he is skilled in many ways that allow him to do a professional analysis and render his opinion. And that's what he's done in this conversation. It's my belief Jimmy tried to perform a service to the XRP community because he had the skills, experience, and knowledge to do it. That will all unfold as you listen to this interview. And I have to warn you, you're going to hear some large numbers projected for the value of XRP. These may or may not ever come to fruition. Use your discernment and do more research. This is not hype. It's not meant to be hype. Please don't take it that way. But using a professional's opinion, you will hear all the background justification that's used in the industry, in real mergers and acquisitions, in real valuing of assets. People always want to know when, what's the timeline, when moon? I don't know. It may take years for XRP to get to the level that Jimmy's talking about, or it may never get there. So, in the meantime, what I recommend is we stay grounded. We stay rational. We don't do anything based on the information given here. Consider this for entertainment purposes only and use your discernment. Please don't make any financial moves based on what you hear here today. This is a long interview. It's almost an hour and a half because it's thorough and we cover every angle that I think deserve to be inspected a little bit more closely from what Jimmy said before. Now, Jimmy's prior interview got him a lot of harassment to the point where he actually left Twitter. My hope is that this information isn't carelessly spread around, isn't criticized without reason, but is looked at with a critical eye to see what an expert in mergers and acquisitions, in valuation of assets, sees as the value of XRP and sees what is clouding the title, if you will, of XRP at this time, which is one of the things keeping its price down. I think the XRP community is going to take this interview in the right spirit, that of deep professional information to add to our base of knowledge that we already have. So I really hope you enjoy this interview as much as I think you will. Here we go. I am so excited to have Jimmy Vallee with me today of Valhalla Capital. Jimmy has been in the XRP community for a period of time, but I wanted to bring him on the show because of a past deal that Jimmy made that I really felt needed a little bit of clarifying. And so, Jimmy, I've invited you here today to talk about that deal and just to get everything out in the open. So how are you doing?
I'm great, Linda. It's great to be with you. I'm a huge fan of your channel, and I've read your book, and I'm excited to have this conversation.
Me too. I think one of the things that the XRP community might not be aware of is your professional background. So tell us about your work experience, would you?
Sure, happy to do that. So really, as it relates to the proposed transaction, before we launched Val Hill Capital more publicly in 2020, I practiced corporate securities law and mostly M&A transactions for 3 big law firms for over 20 years, and was basically involved in multiple public-to-public mergers, big joint ventures. Since my practice was in Houston, notably a lot of the transactions I worked on was in oil and gas. But yeah, did that. So probably the most marquee transaction that I worked on was we represented Continental and its merger with United Airlines. We were on the Continental side. You know, that deal took 6 years to do. We actually started it in 2004. We didn't sign it till 2010. So that helps with perspective a little bit about how long these things can take sometimes. I represented Oklahoma Gas and Electric in its merger with CenterPoint Energy's midstream business to create a new mega midstream business, $11 billion transaction to create Enable Midstream that we then took public after that. So we kind of had an IPO securities offering. On more of the technology side, I represented Micron Technology in a massive, it was about $5.2 billion, as I recall, joint venture with Intel to manufacture what was called NAND flash wafers, which went into, at that time, the iPods and laptops and things like that. So it was things of this nature, ton of private equity transactions in a lot of different sectors. We had consumer products, private equity, tech, and then a lot of energy.
Incredible. So you're an attorney. You work in mergers and acquisitions. That's M&A for anyone not familiar with that. But you also worked in securities law, right?
That's correct. Yeah, my whole career I was a securities lawyer. So, you know, you learn the Howey test. Like I learned that in law school. But, you know, you learn that, you know, right away. And, you know, I was fortunate enough, the type of practice I had, we had a lot of public company clients. So we were always doing, you know, 8K filings and all the form filings when a director was selling securities of a public company and all that stuff. Of course, the more exciting things to be doing was the securities work in connection with an M&A transaction when you had to register securities that were going to be used as consideration in the transaction, or of course, the big thing is an IPO, initial public offering. You know, you'd have an army of people, you know, working on that, be down at the printer, you know, till 4 a.m, ticking and tying every comma in the prospectus document and all that kind of stuff. But yeah, did that kind of, that was part of my practice, you know, the entire time.
Interesting. So you were an experienced securities lawyer, and then you invested in XRP.
That's correct. So, you know, but I wasn't practicing, obviously. Well, no, I think I still was practicing. I didn't leave the practice till the summer of 2020. So when we first started making investments in digital assets, I was still practicing. And I guess you're like, why did you do that?
How did you hear about XRP and why did you invest in it?
I recall hearing about cryptocurrency and you know, the buzz in 2017. I had clients of mine who were, you know, really experiencing, because the bull run was occurring in Bitcoin. I think it happened a little later for XRP, kind of rolling into the new year of 2018. But I was one of these people, like, you know, what are you doing? You're going to lose all your money. Like, I had no idea what this cryptocurrency thing was about, or why anybody would spend any time, you know, looking into it or working on it. I'd say that really started to change. You know, so starting in 2020, I was hearing more about it, hearing more about different projects doing kind of M&A related things. So I was aware there was kind of more of a it was a growing market, right? Not unlike energy or tech generally or consumer products. And so that's what kind of keyed my interest. I really went hard into it as a result of the pandemic. You know, we were all working from home for months and months and months. And, you know, it gave you extra time to do research into things that you ordinarily wouldn't have the time to do. So we started investing in Bitcoin, just like everybody does. I think, you know, bought a ton of Bitcoin right as it was crashing, you know, in March of 2020. Did really well. That investment rebounded pretty quickly, but it was really during that time I was in search of, I became convinced that, you know, we were going through some type of transition in our financial system to being more digital, not unlike what had occurred when the internet, you know, happened back in the 90s. So, you know, that's something I've lived through. This looked the same. I'd always told myself if an opportunity, you know, paradigm shifting opportunity happened again, I would get more into it. And so it was appearing like that, like this, you know, this digital asset paradigm that we're going into was kind of a new internet, this internet of value type of thing. So it would have been, you know, in connection with that due diligence that I was doing personally, where I ended up learning about XRP and Ripple, the purpose it was serving, the partnerships that they already had, the people they were working with. At this time, we were already starting to hear from the World Economic Forum and the IMF, you know, about the Great Reset and things like that. So, you know, and they were mentioning that, you know, we're going to go to digital currencies. They're starting to talk about CBDCs, which are central bank digital currencies. So that's, you know, just Ripple seemed, XRP seemed to be the best positioned. It had the best attributes from a technological standpoint. It was, I used to call it the $6 million man. I'm dating myself a little bit here, Linda, I apologize. But you used to call it the $6 million man of crypto, right? Because it was better, faster, or stronger than all the others. And that's, I mean, that's really where we started to get into it. And as you continue to diligence, you know, everything around it, in the shifting geopolitical landscape that was occurring at the time, it started to become, you know, pretty obvious where this was going, at least from our perspective.
Yeah, I'm with you. When I saw this opportunity, it felt like a cycle was coming back around again, and that internet cycle was so special, so incredible, such a wealth-building time that people that didn't live through that don't really understand what's coming, because those prices moving incredibly and new companies coming to market, going public, it was such an amazing time. And to think that we may have something like that in our future again is really exciting.
Yeah, my big lesson was that it's not necessarily the first lesson from the internet era, was that it's not necessarily the first movers that are going to make it. It'll be the businesses that have a real utility, like Google, like, you know, even the social media businesses all had real utility. Amazon's probably that's the 10,000 pound gorilla, right? That I mean, look, started out with a very small niche. You know, I remember seeing interviews of Jeff Bezos back then, and just like, God, this guy, you know, really, he's selling books online. That seems like a disaster. And look at what they've grown it into. You know, so I think that really helped inform okay, Bitcoin is the first. It's the name, you know, it's the Kleenex of the industry, but it may not, you know, we really got to keep digging to figure out, is there one that's going to be the most useful? Because when the first wave goes through and it goes back out, it'll be the ones that are most useful that have real utility that will win the day. And that's, we still believe, that's XRP and XLM.
Yeah, I agree. And the utility is key. And, by conquering the cross-border payments area, I mean, they just went after the biggest market possible. But just to go back to your point about Amazon, an $18 price per share at Amazon's IPO, 100 shares, $1,800 would be worth $12 million today, which, in the world of stocks is a lot of money, but in the world of crypto, it's really not. And that's one thing that we've seen about crypto is the compounding rates are so much higher, are so much greater already, just in a few years that we've seen crypto, that yes, not all of those are going to survive. Not all of those are going to be the winners in the long term. And I think you're right that we have to really distinguish among those and who has the utility and who's got the speed, the green energy, the best technology available. But back to you and XRP, I first met you online, really. I mean, I saw you online on a video with James Rule, and you made a statement that really caught my attention. And you said, I think there's a deal to be done with XRP and the Fed. Can you tell me more about that?
Yeah, so that interview was in February of 2021, and we hadn't really honed in on the Fed so much. I think James took like a 2-minute clip, and that's the thing that went viral that everybody's seen. The interview's like an hour, right? So that's like a 2-minute excerpt of what we talked about for an hour. The concept at the time was that, and I'm sure we'll probably get into the whole SEC lawsuit and our thoughts about it and going into it and why that never really scared us or whatever a little later. But we actually thought we were more like the time we're in now back then. The timing was acute, that the central banks really needed to do something. We had come to the assessment that they were virtually bankrupt and that they were going to need to do a couple of things. First, they were going to need to speed up the velocity of transactions, which, of course, digital assets allows them to do. We thought that use case, that if you didn't have the regulatory overhang of the lawsuit from the SEC, you would immediately see it at this $10 to $20 value. Just kind of normal starting use case type stuff. But we used, we were looking at the debt clock back then. We were doing some kind of, what if you reset the economy back to a gold standard type analysis, and the implied price of gold based on the debt at that time was it was about $35,000 an ounce. So it was this thought of you could see the G7 come together, right, and shake hands on a deal where their central banks will start trading gold again and supporting their own national currencies with on a gold standard, just like Russia has done, right? Mm-hmm. But that they wouldn't. It was too cumbersome in the world we live in today to be putting tons of gold on military aircraft and shipping them back and forth between countries to settle up transactions at the central bank level. So why not price a digital asset? Why not use the best one, the most useful, and basically just tie that 1-to-1 to an ounce of gold? And that's where we kind of came up with this, concept that you could see some people sitting around the table going, we're going to go back to a gold standard. We're going to write up these assets. We're going to write up gold into what the implied price already was, and then using XRP to communicate that value digitally instead of having to actually do it physically. And so those two statements that I make in the clip, that's basically what was behind it.
Okay, so I think there was a lot of confusion about how you valued XRP. I mean, for the retail investor, today XRP is roughly 40 cents. And to come up with this 5-digit value, I think there was a lot of misunderstanding. People just really weren't following along with that whole process. So can you explain that a little bit more in detail?
Sure. So, so now we're kind of migrating through time a little bit, because I think when we came up with the terms of the deal, that was in August. So, right, we're 6 months later, roughly. Yeah, 6 months later. So during that time, we're learning more about what's going on with the lawsuit. Number one, as an investment team, we were skeptical that we were going to be able to get justice through the court system, with the federal government being the adverse party, okay, in the lawsuit. So we suspected by that time there were some bad things going on that they hadn't bubbled up yet, but that basically the SEC would do all things they could to make this go on as long as possible. So that's a piece of it. So if you find yourself, you believe, and I will circle back to the value question, just trying to give people some context here. If you circle back to we believe the asset has a present value far in excess of what it's trading on the market is encumbered by the lawsuit, right?
Right.
As well as the unknown stuff that's behind the lawsuit that we didn't know. We know a lot more now, but we didn't know that.
We know about Eastgate now. We didn't know about it then.
To say it plainly, we know about Eastgate. We didn't know for sure that Eastgate existed at that time in the way that it's played out. There was a little bit of okay, how do we go about establishing fair market value in this context where, the government is basically suing the company, and basically the way that was working? How do we, go about establishing fair market value? What fair market value is basically what a willing buyer and a willing seller are willing to trade at, having all of the information, right? So everybody would have known about Eastgate, and everybody would have known about the private ledgers and things like that, things that we would come to learn later on down the road. But if everybody knew all that information and they weren't being compelled to transact, what would they transact at? And so that's the theory behind proposing a transaction, is to begin to establish what fair market value is outside the case. Keep in mind, there's been tons of damages, right? Like when we get to the end of this case and we look back and we've got all of the information about Eastgate, the corruption, all that stuff, it will be at that time that it occurs to everyone the trillions and trillions of dollars of damages that have occurred by basically not allowing XRP to have its true value.
That's right.
Notably because of the lawsuit. So it's going to be at that time that you're having to look back and say, well, what did people think the fair market value was at the time? Well, they won't be saying it's what the price was in a manipulated retail market that is through these exchanges, which we've come to understand are actually controlled by the same legacy banking system, right? So it had to be kind of that mindset. And then we went through a classic, valuation type exercise process. I think when we initially proposed the transaction September 13th of 2021, we had a $25,000, I think, per XRP price. It's basically valuing everything that had to get equitized, or at least most of it, to a $2.5 quadrillion, all the money type concept. We ultimately then in October, because, we learned more about various things, but we ended up proposing a higher price. I think the last one was $37.5 that we proposed October 29th. We went through, there were several different kind of valuation methods we used. We looked at the AFNI Michnik model, which Susan Affey, I think is her name. She was a Stanford master's professor. She was on the board at Ripple. And then Robert Michnik, he was at Stanford in the master's program, I think, when they did their white paper on how to model digital asset or how to value digital assets. And they looked at Bitcoin and looked at XRP. So we had that. That was from 2018. We applied that same methodology and looking at stuff, but that model kind of looks at which I think is the way most people think about it, kind of this gradual adoption type of a process, right? So, it's going to start out at $1, go up to $5, $10, $20. That's the way most people think it's going to happen. We were basically trying to go to the end and say, no, what's the fully realized value of the ledger? And therefore, what's the implied value of an XRP? And basically discount. We did a discounted kind of a modified DCF, discounted cash flow type valuation as well. And then the other piece that was critical was this kind of this collateralization of the ledger, which is going back to a gold standard, or is it going to be just gold? Is it going to be gold, other precious metals, oil and gas? We thought for the Middle East countries to come along with this type of a thing, you would need to value oil and gas in the basket of precious commodities in order to figure out what each country's kind of in-place resources are. But it was kind of that type of exercise. We had a lot of information. There was one document which anybody can go look up, still available on the web, called the All the Money infographic. We looked at all those sources. We brought those sources down because they were all old numbers, 2019 numbers, as I recall. So we had to bring those down to 2021. Those were kind of the three valuation models we looked at. Basically we put out that value, but there's other terms in the deal as well as far as consideration. You learn first year in law school in your property course, you learn about property being a bundle of sticks, okay? And so it's really just a bundle of separate rights. There's the rights to possess it. There's the rights to direct it. There's, and securities, you can vote them sometimes. You see what I'm saying? It's got all these indicia of property rights that are bundled into this asset, right? So one of the big things that XRP has, that several digital assets have, that XRP notably has, is the right to receive airdrops. There had already been the Flare snapshot, the Sologenic snapshot was coming up. So there was all these, there was the NFT project that's running on XRPL out of Italy, Elysius tokens or something?
Yeah, Elysian, yeah.
Elysian.
So,
yeah. Yeah, there were all these rights, right, if you will, to receive tokens that hadn't even been issued yet, that we didn't think just because you handed over your XRP in connection with the deal, you should lose that particular right. So we bifurcated that property right. We basically said, we'll basically fork that right off into a new type of an asset. We called it the residual airdrop right. And the person would still have whatever that XRP that they were holding before was going to get in airdrops. Whether we know them now or in the future, they would still get them now or in the future. So that was something. There was some other elements, kind of there needs to be some recognition to compensate the damages that XRP holders have experienced because of the SEC's actions. And the SEC and maybe others. So things like debt forgiveness and tax holidays were basically added in to terms of the transaction to really compensate the people that walked through the hellfire, or, you've seen Shawshank Redemption. They crawled through the 2.5 miles of filth to get to the other side of this, right? That's what those terms were about.
Well, and I think you, as an experienced mergers and acquisitions attorney, securities lawyer, had all of the right elements to be able to look at this deal on behalf of the XRP community, which is really what you were doing, is proposing something that would benefit everyone at a higher price level, because you understood that the Federal Reserve issues the currency. Here we are during the pandemic at that time, seeing more and more trillions issued, more debt issued, and you're looking at 2.5 quadrillion of obligations, including derivatives and the bond market, which is debt. And, when they create currency, it creates debt that the people have to pay the Federal Reserve back for. So you were actually looking at a way to retire all that debt, in a sense, end the old currency and complete that transaction by having them to offer us an amount for XRP that would forgive all of that debt, in a sense. Is that right?
That's exactly right. If you just break it down to like the fundamental accounting equation, assets minus liabilities equals equity. It was, what lever can we pull to kind of rebalance this, right? Rebalance this debt system, which is clearly out of control. And you could do a debt jubilee. You could forgive all the debt, but that would hurt the investors who basically are holding debt as investment assets, right? So that didn't really seem fair. We really thought it was just this elegant solution, because if you wrote up the gold, it would have been kind of the same issue as taking the debt down. Then the people who just happen to be holding gold would experience this windfall and the write-up of the asset, right, that not everybody holds a whole bunch of gold, because we were taking off the gold standard 50 years ago. But here we had this brand new asset class that really hadn't been valued yet. It is such a unique moment in time to kind of have this brand new asset on the scene that we can basically have everybody come together and say, well, we're just going to say the fair market value of that asset is, way up here. And that would end up, basically re-equitizing. It would keep the debt holders whole. It would make a very small amount of people extremely wealthy. But, when we were looking at it, that's kind of a small price to pay to basically get us out of this, what appears even to this day to be an unnavigatable problem. The Fed it's now becoming very mainstream. It wasn't then. The Fed's kind of stuck. If they raise rates anymore, they're going to slam us into, a recession or worse. If they just go back to QE, quantitative easing, and continue the trillion-dollar money printing, that's going to inflate us into oblivion. It was a real elegant solution, we thought. It was also going to serve the side purposes of collateralizing the XRPL with its real full value. People would start to be able to trade right away, and we kind of saw the central banks would be taking the XRP back in by doing the transaction, and they would be using it kind of on the back end to do, like I said, instead of flying gold or other precious commodities around in military aircraft, they could just be bing bing pinging each other with these XRP transactions to settle up. And the rest of us would be filtering over time. There's the people who will be participants, we call them the participating token holders. People who will be participants in the transaction are going to be kind of a different class of people almost as a result of that, right? And it'll be generations as their wealth is distributed amongst their families and for charitable causes and things like that. And then I guess more of your retail, everyday consumer people would, have not only the debt burdens on them, these taxing burdens relieved from them. And, gosh, just imagine the uplift in humanity of being free from taxes alone. Everybody was going to benefit in a very, very positive way, even though the XRP token holders were going to materially benefit in a very major way.
Yes. So I think what people had a hard time wrapping their head around was the fact that XRP was selling for, let's say, under $1, and you were proposing $35,000, let's say, and why couldn't the Fed just buy it off the exchanges? But it's not about them buying it off the exchange or buying it in that way. It's about retiring their debt and getting rid of the total debt that's outstanding. And that's the disconnect that I think most people really didn't understand, that I want to make sure that we describe clearly here.
Mm-hmm. Tried very hard to get all this out even before we ever threw the deal out there. Get these concepts of how do you establish fair market value for an asset and things like that. And, unfortunately, we just live in a time that we read headlines and we hear sound bites, and that's what informs us. There's not a lot of pulling back the onion one layer and going a little deeper. But you're right. The driver for the Fed, think about it as a legacy banking system, to do the transactions, because they were going to be able to set the price in a way that established fair market value for the asset and effectively collateralized the debt, right? So if most debt is synthetic, it suddenly was supported by an asset. But you had to do that in an arm's length transaction. That's part of it. And then, the kind of sub pieces of this is if you're using resources that are available to you, like agencies of the government, to do things like bring lawsuits, that then effectively puts a cloud on title. The reason XRP today is, I looked at it today, 40 cents or whatever, right? But the reason it's that is because the institutions have no regulatory clarity. They can't really get into it in a material way because there's effectively a cloud on title. What is the regulatory treatment of XRP? It's still not. Nobody knows that. Nobody knows that definitively, right? We need to come to an agreement on that as a collective marketplace, but nobody knows what that is. So the price that we see right now, I don't know how to say it more plainly, is that ain't the price. We have done transactions in XRP just like we do with barrels of oil, with cubic feet of gas and stuff like that, where we have priced XRP in a contract with another party for values that are far in excess of what it's ever traded for. And that's because the party on the other side wanted the XRP, right? And we were in a position to be able to sell them material amounts of XRP. And vice versa. We've received XRP at values that are called off-market values. This is happening all the time. This happens in markets every day. We do oil and gas futures contracts and say, I'm going to sell you at this price. That person agrees. That doesn't change the market price of what oil is, right? That doesn't change the NYMEX price. That's our agreement on what we're going to value the oil on. You understand?
Mm-hmm. Yep.
That needed to be done in an arm's length transaction with people sophisticated enough to do that deal. The market isn't what the price really is. The market is that's what we're being fed. That's what we're being given.
Right.
We're going to find out, what we're finding out is most of our markets actually, JP Morgan was brought up on, manipulating the precious metals markets, paid a nominal fine compared to the multiple billions they made. I think they paid a $125 million fine. They made billions, right? this is becoming this is like a tip you give to your waiter, for doing a good job, of making the market, work for you. So I certainly understand the criticism and the vantage point that a lot of people had of why would they do this? They could just go buy it for 70 cents or $1.30 or whatever it was at the time. That was just a misunderstanding of how markets work generally. The markets are not necessarily what is traded on a retail exchange. People just need to understand that. It's just not the way it works.
Well, exactly. Plus, we've lost so much liquidity because so many exchanges have taken XRP off the exchange. So we don't even have full liquidity. We don't have clarity. I mean, we are so in the prehistoric era.
What it was like for us, the way we thought about, the lawsuit, when I say cloud on title, I want to impress someone to your listeners how significant of a value damaging thing that can be is that, if you think you've got a big, you got a ranch somewhere in Texas, say you got, 50,000 acres, right? And you learn that it's just, you're sitting on a super major oil field, right? And it's worth $300 billion, okay? And then someone comes in and they whip out a piece of paper that's a mineral deed from 1872 that says, whereas you thought you had clear title, right, all the way to your ownership of your ranch, it turns out, your great granddad actually traded it to, the railroad, or he settled up a debt, and he gave up the portion of the property that has most of the oil in it, right? And all of a sudden, there's what we call a cloud on title. Do you think you can go sell your $300 billion oil field for $300 billion? No. You're in a lawsuit. You're in a lawsuit without anybody understanding who really owns and what the regulatory treatment is of that asset. It's almost the exact same thing here. It's just the cloud in this case is a regulatory treatment thing, and it's being done by agency of a federal government instead of a third party.
Right. Yeah. So you were on social media on an airplane and said as a caption, "The deal is done." So what did you mean by that?
Actually, what I said is, it's done. Congratulations to all. So, and Linda, I've explained this so many times. You'd be shocked. But I literally on Twitter responded to so many people that asked me this exact same question, contemporaneously with saying it. Okay, I was on a trip back. The G7 met and agreed to 16 principles for CBDCs, right? Central banks, digital currencies.
The G7 countries met and laid out.
They laid out
the rules for central bank digital currencies.
16 principles of central bank digital currencies, how they were going to be and how they were going to interact with each other. G7 did that October 8th, 2021. Same day I'm on the plane. I had predicted 8 months before that there could be a deal done, there could be an agreement struck among people like the G7 that they would come to some type of arrangements to start trading in digital currencies. I published the article in a tweet. I tweeted out the article, the G7, and then my very next tweet was, "It's done. Congratulations to all." Because after I published the articles, I was sitting there thinking and reading through again the 16 principles. I was like, okay, do you think that they came up with an agreement on these 16 principles and they don't know what the price is going to be? Of course they do. Yeah. Price is the first thing that you agree to in any transaction. You don't even keep talking unless you got an agreement on what the price is. So that led to the "it's done, congratulations to all," which was a reference back to the James Rule interview, and that it wasn't about the deal we had proposed to the Fed.
Okay.
And hopefully that clears it up.
Yes. So your deal did not get accepted by the Fed. We can say that for sure.
To my knowledge, it hasn't been.
Okay. So let's talk about the lawsuit. You
Okay.
mentioned that you're very familiar with the Howey test. What do you think the outcome of the lawsuit is going to be?
Well, I'd like to say if people actually follow the law, there is only one obvious conclusion. That's XRP is not a security, and the SEC is going to basically lose categorically across the board. I think probably at its current pace, probably the Ripple summary judgment on the fair notice defense, which is a little more into the technicalities about, things that were in the market prior to the lawsuit, things that, that we in our due diligence knew about, like that Ripple had a settlement agreement with FinCEN back in 2015 where FinCEN said that XRP was a virtual currency.
That's right. FinCEN did do that.
Yeah. Things like Chris Giancarlo and his colleague from Wilkie Farr had published a full analysis of XRP applying the Howey test to it and had come to the conclusion XRP was not a security. Our own analysis, the Bill Hinman speech that basically was market guidance. The American Bar Association says market guidance. Every major law firm, Latham Watkins, Cravath, Skadden Arps, every major big law firm had written papers or written, client alerts analyzing and had basically said, Bill Hinman's speech provides guidance to kind of all digital assets. If you're quote unquote decentralized enough, we now understand that's decentralization is not a piece, has nothing to do with a Howey test, right? When they were looking at, the securities that covered the orange grove, the concept of decentralization was not a concept, right? That is something that the SEC and Bill Hinman made up in 2018. They just made it up. Just like made up a new prong and poked Bitcoin and Ethereum through it and then, basically closed the door on everybody else. But, at that time, you had all this market information. The June 14th, 2018 speech isn't the only speech that Hinman gave. He went on CNBC the next day, said the same thing. He went around and did a whole conference tour at law schools and digital asset conferences, and Jay Clayton did too, and Robert Jackson did too. They were all saying this was guidance. That Bill Hinman gave a speech and provided market guidance. So basically, and I think it was one of the participants of and I can't remember the two law firms. But there's two women partners who were part of the venture capital working group that ended up proposing, the decentralization concept, I guess, to the SEC. And the SEC grabbed that and ran with it. But they even were like, if you're more quote unquote decentralized than Ethereum, you're not a security. Well, what are the objective criteria for being decentralized? Is it who controls the tokens, or is it who controls the nodes? All these types of things, because if you kind of went down, the only thing that you could really argue that the relationship of, Ripple and XRP is some type of a security to Ripple is the escrow. It's because they indirectly control the escrow. But if you do 5 minutes, probably more, maybe half, if you do half an hour of reading about the escrow and how it's cryptographically, put in this escrow account, it's coming out the same amount every month. They're selling about the same amount every month and then kicking the rest to the end of the escrow period. So the escrow period is kind of this rolling, continuing to roll out type period. You realize that, even that piece of it, Ripple they don't really own it the way, we talk about owning. Remember back to the bundle of sticks, they have taken some of those sticks, the right to effectively directly control it and put that into a cryptographic escrow, right? So what does that mean? They've been accused. In fact, I just saw Brad Garlinghouse responding. He was at a cocktail party with somebody, and they were asking him, and this was a sophisticated Bitcoin investor who's asking him this question, but is effectively saying, you control all this XRP, you could effectively dump it on the market tomorrow. That's just not the case. You cannot cause the escrow to basically dump all the XRP that's held in escrow onto the market.
That's right. That's been disproven, but that's what it tends to come from the Bitcoin people that make that argument, and it's been disproven.
Yeah. So, the Ethereum contingent, the Bitcoin contingent really don't want to be hitting this you own too much XRP argument too hard, because when we really understand the wallets that control the bulk of the Ethereum and the Bitcoin, it's even worse. It's just FUD. It's fodder to throw out there. It's an easy target because, in my opinion, Ripple really has tried to walk the final mile on doing this within the existing regulatory landscape. Very impressed with their ability to kind of keep this straight down the fairway and keep kind of moving forward, having all the success they're having internationally while being captured in the largest capital financial market in the world, the United States. It's tough. And having to basically take these insults and people pulling this out all the time, we've gotten a little taste of that after proposing the deal. It's impressive. They get a hat tip from me for sure for just enduring all that. I mean, Chris Larson and Brad Garlinghouse have been sued, personally by the SEC in the context of this. They've had to hire lawyers. The stress, when you're in any type of dispute over any amount of value, it's a tough thing to go through. This is your own government, coming after you. It's tough, what they've had to go through. So I definitely tip my hat for kind of doing it in the way that they've done it, a very, in my opinion, honorable type of a way.
I couldn't agree more. And, Brad Garlinghouse says how they do have to comply with regulations. They are heavily regulated. They're working in the banking system, which is one of the most heavily regulated industries. And, some people have criticized me for saying that Russia is going to go around sanctions with crypto, which I have never said. I do not believe that's the case. I do believe that there's some sort of a situation happening where Russia's transitioning because of sanctions and because of what's going on with their wanting to trade oil and gas but not accept euros or dollars, and them wanting to pay debt but the agencies not wanting to accept dollars, and then they pay in rubles and on time, but they are considered in default. I do think there is something in a transitionary situation with currency, with, an obvious solution at the end of the road somewhere where XRP is the answer. But I am in no way saying, and never have said, that they would use crypto to get around regulations, to get around sanctions. Absolutely not. And Ripple has done everything by the book and deserves kudos for putting up with all of this garbage, all these insults, as you say, that have been hurled at them unfairly, so much disinformation, misinformation, plain out lies that just are not true about Ripple, which brings me to the question. You and I have both invested in Ripple stock. Why are you an investor in Ripple when they are under a lawsuit right now?
The Ripple equity, we think, is a great deal because they're a company that's on the leading edge of the digital asset movement. I mean, we talked earlier about moving, kind of from the internet to the internet of value, and we can all, I think, see the paradigm shifting. They're the best company, but what they do, I mean, we realize that they are providing software engineering type services to heavily regulated banking industries and other payment transmission providers at a very high level and doing it very well. I mean, the results speak for themselves. It's like 8x year-over-year growth in ODL. You've got 95% of the growth is outside the United States. The company is doing extremely well. We already have alluded to our belief in the management team and how rock solid. I got to tell you, I mean, in the early days, I was like, man, I wish I could have had Brad as one of my clients, when I was practicing law, because he's just right on point, straight down the fairway, and he's never emotionally kind of, tilted, and
rattled. He never gets rattled.
Look, I worked with executives at his level my entire career, all the time, and I could count on one hand the people who could basically be like him, or you'd send into the analyst meeting or a stockholders meeting or whatever. There was an intense situation, and they needed to be exactly on script and not deviate, kind of no matter what comes at you. And then, if you had the charisma and the charm to be able to have people like you, like in the process, it's just next level. So, it's basic valuation stuff. They've got a great business. They're having great financial success. They have a phenomenal management team. They have a phenomenal board. Look at this, Rosie Rios and Sandy O'Connor, and I mean, these are absolute freaking financial ninjas who are elite in the legacy system too, right? They are a great equity investment. You look at the performance of their equity. I think we were buying. I think their last printed deal was a $10 billion valuation. They just had the Series C buyback that they did, and it's a $15 billion valuation. You can buy it on Link2, right? Isn't Link2 one of your sponsors? Yeah, you can buy it on Link2. Use Linda's affiliate link if you decide to do it. But you can buy it on Link2, and you get it at like half price. But it's different, right? It's just a different investment than holding the XRP, which is more about utility adoption. What we're trying to do, help bring about that adoption, get more people using it, and helping transition into the new digital economy.
Yeah, well, I thought it was very interesting that one of the billionaires who's very prominent in crypto said that he invested in Ripple stock. In fact, he said it was his largest holding, and this was a couple years ago, and that he had not invested in XRP yet, which made me pause and think about that for a while and conclude that perhaps that was foreknowledge of the lawsuit coming, which would keep the price of XRP down, and he wouldn't need to buy it for a couple years. Maybe that was already known.
It could have been. There's certainly there's smoke rising around that type of a fire right now. I think as people are learning more and more about the meetings with the Ethereum Alliance that Bill Hinman had, right down the stretch of going in to prepare for the speech, given the free pass, it does appear that Ripple may have been targeted for lawsuit. And, it was, you can look at, Empower Oversight got the list of people, at least, that Bill Hinman was in communication with while he was there. And it includes a lot of these types of investors who are very, they're OG crypto investors, institutional crypto investors.
Right.
And yeah, they do seem to have a lot of knowledge that other people didn't have at that time.
Agreed.
Ironically, if XRP is a security, then they're all guilty of insider trading. If XRP is not a security, then I think they're not guilty. There is no insider trading in commodities, right? There's market manipulation. There's fraud. They might be guilty of other things, but the insider trading thing, they may be able to get out of. So they should be changing their tune.
Yeah. Okay, Jimmy, our audience, I know, is pounding the table and saying, Linda, get back to the G7 price that Jimmy mentioned. So, Jimmy, what do you think the G7 price is that they agreed on?
We stand with kind of our initial assessment. I think it's going to be tied to moving back to a gold standard. And that's a euphemism. When I say gold standard, it's a euphemism for some type of precious commodities standard. So it's maybe probably a basket of commodities, which you could see being, gold, silver, diamonds, oil, gas, things of that nature. So when we talk about the gold standard, we're really just talking about going back to the old level playing field. I think that's kind of what brings it about. And so you're really talking about, how do you value XRP against that new standard if it needs to, communicate, transmit all the value. And yeah, we still firmly believe, in fact, if anything, it's only gone up. There's only been more money printed and more debt put into the system since we proposed the transaction. I mean, 2021, right? Didn't we put something like 65% of the dollars in circulation were printed in 2020, 2021? It's part of the pandemic.
Something like that.
So what was, 2.5 quadrillion that became 3.75 quadrillion is probably in the magnitude of 5 quadrillion now. And if you just do the math, and this is actually not even taking into account the XRP that's burned in connection with every transaction, it may be higher than 37.5 at this point in time. Good news for us is that we did have some kind of drop dead dates in our offer, so we wouldn't have to take 37.5 now if the Fed decided to engage. We don't even know now if the Fed is the proper party to actually do this. Maybe it's more the Treasury. Who knows? But whoever the counterparty is, they may need to pay a little more. But, it's what's going to be the pain point for them to get them to the table to actually have the conversation. Who knows what'll cause that?
Well, I mean, if Russia is declared in default, that could start some sort of a domino effect in the bond market, could it not?
It absolutely could. And we're of the opinion that type of thing is already popping, whether it be, from Russia, obviously that would blow a massive hole if Russia is declared to be in default, something that I don't think you could pull out of because the dominoes, it reminds me when I was a younger lawyer, Enron went bankrupt and I went to this great energy conference in Houston. And he was the former general counsel at this point in time of Enron, was describing what it was like as, basically they started to go into default. And he said they had like 4 major fax machines like in the general counsel's office because they're like CC'd on notices of defaults. The notice of defaults were coming so fast they couldn't keep enough paper loaded in the fax machine to keep up. Because, basically what happens when you go into this death spiral. I don't know if you've ever been involved in a company that kind of goes bankrupt that has a lot of obligations, but basically you end up with something. You have like credit ratings, default triggers and stuff like that. So as soon as you drop below, investment grade, if you're investment grade, or if you're BBB minus, whatever it is, if you drop below it, that ends up becoming a default under all these contracts. Then you can have something at a lower level, which when all the mid-level contracts default, they end up slamming you down further, and it's effectively it's a death spiral that only increases in speed as it unfolds, right? So you could literally see the global economy go through a similar type of a thing, not unlike what happened to Bear Stearns and then Lehman Brothers back in the 2008, 2009 mortgage crisis, right, where you end up having, banks like that starting to just pop. We've got the Evergrande thing out there. That's leading into, we've got major asset managers that are Western asset managers like BlackRock, Invesco, Vanguard, all these major asset managers that are exposed significantly to the Asian debt markets. Tether is apparently supported by some Asian
Evergrande. Tether has Evergrande paper.
So and what people don't understand about the debt is that it's not real, right? There's nothing really underlying it. It's a contract, right? So you can literally just rip it in shreds, and then you'll work it out in the wash about who actually has a claim on the actual asset of the business or the country, whatever it's going to be. But yeah, if Russia goes, it's going to happen pretty fast. I think what's going to happen, and I think we're already seeing this, you're basically seeing the BRICS nations starting to align themselves with Russia. You're actually having a couple of European countries starting to play footsies with that new bloc, the new BRICS bloc, and saying, hey, maybe we'll come over there and get on that gold standard that you guys are trying to do. The Middle East is already starting to trade with Asian countries for oil and gas and non-dollar denominated transactions. I suspect that we're going to peer over the cliff, maybe bungee jump into it. And that's when the West is going to come to its senses and strike the deal. Or that's when they say, guess what, everybody? Back in October of 2021, when we agreed the 16 principles, we actually agreed to move to this new digital commodities-backed economy, and it'll stop the falling knife.
It's a global agreement.
A global agreement. That's what I hope happens. At this point,
I don't see how it can be anything else.
We don't. The details of how it actually happens, I think, who knows. But from if you zoom out to the 50,000 foot level, this is happening. People are lying to themselves, or they're not paying attention, not doing the research if they're unaware of it.
Because they won't hear it on the news.
You're not going to hear it on the news. No, you're not going to hear it on the news. The dollar's toast. I mean, it's over. It's already lost its world reserve currency status. And so what does that mean? And, how are we gonna get everybody back on a level playing field? We came across some documents back in 2020 that was looking at the world gold reserves, and there are sovereign entities, let's call them, that have material amounts of gold to be, put into the system for the benefit of humanity, and they're willing to do it. But everybody's got to kind of go back to what the real level set gold standard is. Judy Shelton has talked about this before, and she says level playing field in a cryptocurrency kind of way, something like that.
Yeah,
the gold standard in a cryptocurrency kind of way. But in that document that we had, that talked about, these sovereign entities wanting to, basically put the gold into the system for the benefit of humanity. It actually showed how off the gold standard, like what the real level set is, how off various countries were. Some of the big economy countries like the United States. The United States was like 15x out of whack because we have been the world reserve standard, right? So this is a full realization of the Triffin dilemma. Are you familiar with the Triffin dilemma? Will your listeners know what that is? Okay.
I don't think everyone does. Why don't you go ahead and explain it?
So the Triffin dilemma was this thing that was debated back during the last Bretton Woods reset coming out of World War II, which was basically you can't have a national currency serve as the world reserve currency because the incentives are different for kind of the treatment of each. In other words, the things that you want to do in the international geopolitical to improve your position internationally and geopolitically will work against what you need to be doing nationally to improve the livelihoods of your citizens. Okay, so this is if you pursue both, you'll end up doing in the end both poorly. Such that it ultimately won't work. And that's what the dollar has done, by attempting to, export democracy and do the nation building that we've tried to do in Iraq and Afghanistan and Ukraine and all over the world. We've come to the end where what we do in our international interests, which are legitimate international geopolitical interests, it hurts the citizens back at home, right? And if you were to go and then put the money back here at home, well, you would lose the progress you've made in the international community. So that's the Triffin dilemma, is kind of having a national currency serve as a world reserve currency. I think the other major economies of the world are very clued into this. I don't think Russia or a China or an EU wants to become the new world reserve currency because they're very familiar with how it's going to end. Ultimately, it's not going to work. It's better to have either the rise of national currencies on the gold standard, remember that's a euphemism, on the gold standard, then trade cross-border with the one world reserve currency, which is a neutral bridge asset to go back and forth. Basically, I can take a euro and I can turn it into a ruble. I can take a ruble, I can turn it into a US dollar. Therefore, everybody gets to basically invest in their own citizenry, right, their own community, and bring up their citizens while being set. But you basically have to come up, the deal that has to get done is basically saying, okay, Saudi Arabia, you've got this much value to bring to the table right now. So when we reset, you're here. Russia, you're here. U.S., you're here. It's that deal to basically level set everyone, and then it's game on. It's game on. I, for one, believe that on the other side of something like that happening is really, really beautiful for humanity. To the United States, that would mean probably massive manufacturing coming back. It'd be a rise of the middle class. We could do so much by investing in U.S. infrastructure and U.S. manufacturing, in training people to participate and be active participants in the new digital economy. Would be just a glorious, glorious time that would go on for decades and decades and decades. So I think ultimately it's something like that will occur.
Well, Jimmy, I think that's a great place for us to end today. This has been an amazing conversation. Thank you so much for your time, for sharing your expertise, your knowledge, your experience with us. It's so valuable to the XRP community, and we are so grateful to you.
Thank you, Linda. Really enjoyed the conversation.
I hope you enjoyed that interview. You can see that it was incredibly thorough, and Jimmy really gave a lot of thought to how he valued XRP. But I want to share with you now the article that he mentioned. This may not be the exact article that Jimmy saw, but it is an article about the G7 financial leaders reaching an agreement on digital currencies, and it's dated October 23rd of 2021 from CoinGeek.com. And it says, finance ministers of the G7 countries have reached an agreed position on 13 public policy principles for central bank digital currencies, CBDCs, in a move that could pave the way for greater adoption of CBDCs across the world's leading economies. According to a statement from the U.S. Treasury Department, the public policy principles will be grounded in transparency, sound economic governance, and a respect for the rule of law in a way designed to foster innovation and the development of new digital currencies for retail purposes. In a joint statement, the senior finance and central bank officials from across the G7 said that while innovation in money can bring benefits, these must be tempered by regulation to deal with the potential wider public policy fallout. Quote, innovation in digital money and payments has the potential to bring significant benefits, but also raises considerable public policy and regulatory issues, end quote, the official said. Strong international coordination and cooperation on these issues helps to ensure that public and private sector innovation will deliver domestic and cross-border benefits while being safe for users and the wider financial system. The comments come following a meeting of finance officials in person in Washington as part of a series of meetings bringing together the World Bank and the International Monetary Fund under the leadership of the UK's Chancellor Rishi Sunak. In their statement, the officials said central bank digital currencies would ultimately stand alongside cash, providing a safe, liquid alternative for settling payments digitally and efficiently. We reaffirm that any CBDC should be grounded in our long-standing public commitments to transparency, the rule of law, and sound economic governance. Any CBDC must support and do no harm to the ability of central banks to fulfill their mandates for monetary and financial stability. The development comes as central banks around the world move forward with pace towards launching central bank digital currencies. End of article. As you know, the G7 countries, which stands for a group of seven, is an intergovernmental political forum consisting of Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States. So one final reminder, you heard a lot in that interview. Please take everything with a grain of salt. Nothing can be guaranteed. I can't tell you that that price will ever be reached. I don't know the future, but I do feel very confident that Ripple has one of the finest technologies in the XRP ledger and in XRP as a digital asset. One that is ready to bridge anything of value and all the money in the world. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.